Hey traders, welcome to the Monday weekly game plan. So starting with the dollar, you can see how we had a lower degree structure that's played out quite nicely. We had a nice little impulse up, nice little triangle, and then an impulse up. And now that is a complete little structure on the lower time frame. So now it's all about seeing where to from here for the dollar. It's really the only question we have in mind at the moment. Are we seeing a turn in the dollar, or is this just a corrective rally for continuation of the reflation trade? As you can see, we are very much near the lows of that big weekly structure. So it's all eyes on the dollar, all alert for the dollar to see where to from here. At the moment, no signs just yet. We have a big corrective structure, and what we have following that is a big move to the downside. We don't know yet if this is going to be corrective for more upside, or this is a start of a bigger move to the downside. And that really is the question, because without understanding that, we don't know what other trades to take at the moment. So we'll be keeping a close eye on this week. In terms of trade, this is potentially a decent trade. We have a little bit of a flag here. So maybe a low risk flag trade could be of interest because if this breaks to the downside, there's a fairly good chance that it starts to move quite rapidly to the downside in an impulsive manner. There's also the possibility that what we saw here was the start of a correction, and we're all just going to be correcting here for a while back down to low. So a choppy move back down to the lows. That's why this trade isn't too bad if you move it to break even fairly quickly. So give it a couple of hours, move it to break even, and just see how things play out, because that could play out quite nicely for you. Quite a tight stop, let it run out. Euro will be the same situation where we have, as you can see, again, pretty much the same as the DXY, big impulse down, choppy corrective price action, big impulse down. So the structure is complete, and now it's understanding where to from here. So this gives you a very lower degree corrective structure like a flag. You can trade that to the upside and hope that we just start to impulse to the upside, and all of this was just correction for more upside. Otherwise, we might chop back up to the highs, or this is part of a bigger correction, or we might just see this fade. Excuse me. We might see this fade and see continuation in the lower time frames. But this flag, I think, is still a good high probability trade, given that the probability of a move from here in your favor works well as long as you keep your stop nice and tight. The pound, I had a pretty good close look at the pound following this big spike. It looked like we were breaking out of that ascending wedge, and then we had the BOE meeting, and then we just saw a massive spike out of it. So I had to come and re-look at it, and what I saw was potentially what we're looking at is a structure that has a bit of an impulse up, not very clean, but enough to be called impulsive. We have a very, very messy, choppy corrective structure. You have an A wave down, an impulse up, an A, B, C, D, E corrective structure, and then one last push up and a move to the downside. So I'm looking at all of this as a little bit of an ABC. And if this is the case, you can see how this structure is going to take us back up to kind of 140, which may be the highs of the bigger structure. Zooming out, you'll see just how this bigger structure is playing out. We have big impulse down, impulse up, ABC, and then just a choppy wave up. It's really, really messy price action. But at the moment, that's what I'm seeing. I'm not sure about trading this. It's also messy that I just think there's better trades out there. So just thinking that this isn't a short you want to hold on to if you are in the trade. You want to get out of it, wait to see how things play out, and see a little chop back up to the highs, and that may be a sign of where to get short, where to find that short trade. You also might find all we do is go back up to the highs of this quote-unquote ascending triangle. It maintains its structure, and we fall from there, and all we see is a kind of shortened version of this wave, although that doesn't look like it might play out. So yeah, again, it's not the cleanest price action ever. I still remain in the dollar bull camp, which isn't great for being long pound dollar. So I'd rather just sit on the sidelines, wait to see how this price action played out. I sold some pound dollar puts once I started to see that big spike, some 135.60 puts, I think it was. So that's just to kind of pay for the losses of that trade that I took, that short that I took. So I closed that short for half a percentage loss. After I saw a change in structure, I took it off for half a loss and I sold a put just to maybe make some money back if this continues higher, fairly low risk position. New Zealand dollar, US dollar still remains kind of in the confusion pack. All we have really, if you want to look at it in terms of structure, the most likely structure we have is a big impulse down or big-ish impulse down, nothing super impulsive. We have a nice 1, 2, 3 up A wave and impulse down, and now we're seeing some really choppy price action, which means either one of two things. Either we are in a big triangle, A, B, C, D, E, and we're going to start to push higher from here, in which case this tiny little flag that you're seeing may be worth a trade because it is the end of a triangle. This E wave is the end of the triangle. Let me just clear it up for you guys. Back to the 4 hour. You have A, B, C, D, E triangle. Draw in trend lines. You'll see it's something along these lines, and then you can trade this New Zealand dollar flag to the upside. Maybe just a low risk position in that could work out. The other alternative is that what we're seeing here is this is the choppy little B wave section. So you have an impulse, choppy down, impulse up. All of that is your B wave, meaning C wave to come, choppy wave, which we're kind of getting. Then you'll get another chop higher, and then all of that is your A, B, C corrective flat, and then from there we see downside. So again, not very clear, not very succinct, but it's kind of like I said, those transition zones can be difficult to judge. When we're seeing price action like this, all we're really seeing is bulls versus bears, lots of battling going on, trying to decide the future direction of price action. So you look for opportunities where you can, and you take them where you can. To me, the short trade isn't really on the cards because of the corrective price action. If it is on the cards, it'll be later in the week or early next week when we get back up here with a very clear indication that what we're seeing is a complex flat pattern. If we're looking for a trade, then the long trade is on the cards, which means we trade this as a little flag pattern to the upside. So wait for this to break higher. I'd like to see this just play out just a little bit longer, maybe 1 or 2 hours, then put an entry order above the highs and see if it breaks to the upside and see where it goes, then move it to break even fairly soon after that, 3 or 4 hours, just enough to get the trade that potentially looks like it has some legs, and then move it to break even straight away. Take off your risk as early as possible, because this is quite high risk trading, given that we don't have a clear picture of where we're going. Case in point being the Aussie dollar, because there's no clarity in this whatsoever. On the higher time frames, all we have is a big move down, no real clarity. Lower time frames, as you can see, just relentless choppy trading. Impulse down, impulse up, impulse down, impulse up, impulse down, impulse up, impulse down. So it's just so much lack of clarity that it's hard to really get a good fix on any position. If you really had to fish for some kind of analysis, I would say what we have is an impulse down. We have an A, B, C, D, E triangle as your B wave. And then we have another impulse down, 1, 2, 3, correction. Zigzag correction with a little triangle in the middle, meaning we should be going up from here if that is the case. But again, that is a very speculative viewpoint given where we're sitting. So there's not a lot of clarity, and it's high risk to be trading something like that. But again, what we're getting is a nice little flag to trade to the upside that's quite well developed. So we wait to see if this breaks higher, and if it does, we move to break even, and we trail our stop quite closely to get any little bit of profit we can until we see more clarity in the market. US dollar CAD. What we saw out of the CAD was an interesting price action. We had a nice little impulse off the lows, breaking this descending triangle, and we went into correction, the kind of corrective price action we were looking for. So in order to get some clarity on this, we'll need to break it down and see what we have is 1, 2, 3 down, 1, 2, 3 up, 1, 2, 3, or an impulse down, 3 up. Lots of just very quick impulsive moves. So potentially what we're looking at is a kind of triangular shape, a little bit of an A, B, C, D, E. It looks to me like that's what it is. We have A, B, C, D, E. Impulse up, A, B, C, D, E. And this is the kind of trade I'm interested in. We just need to get a decent little entry. So I'd rather wait for this to give you a little bit of a flag and then trade that to the upside. This has way more upside potential than some of the other pairs, and it goes against that trade. So it kind of hedges that flag, where you can take, say, the Aussie dollar, US dollar flag to the upside, but then trade the US dollar CAD to the upside, which is obviously US dollar strength based and has a much more higher potential for upside, where you see the lowest structure. We're going to be trading this up to the 130.06 region, or 130.60 region. So that is a good two little US dollar hedge trades, one looking for dollar strength, one looking for dollar weakness, which may play out in your favor. Silver, kind of still sitting on the sidelines for silver. I thought maybe what we were looking at is a potential little expanding flat here, but we don't have the MACD crossover we were looking for. So I'm more inclined to just sit on the sidelines with silver and see how things develop here. All we have right now on the lowest time frame is an impulse and something that looks corrective potentially, always impulsing to the upside, which I don't really understand if it was. Higher time frame, I still think at the very least we need to go visit 22 before we can say more upside is coming. So I remain a kind of silver bear, which is like a dollar bull. Again, I remain as a dollar bull, which affects these trades. So we're keeping a close eye on this to see how it develops. Silver market's been very difficult to read the last few days and or weeks, but the clarity will come eventually. So we just need to be patient. Gold broke down out of this little wedge, interesting price action, and where we're sitting on this wedge is right at the minimum of the structure. So again, I expect more downside more than anything else. But again, when you look at the actual structure, very unclear as to where we're sitting, where we're headed, and what to expect. Really lots of choppiness. So again, waiting for better price action, waiting for more clarity, which will come eventually. Copper's at an interesting level and is kind of part of my dollar thesis, where we have a breakdown of this little trend line and a potential corrective structure that indicates lots of downside to come. So we have this impulse from the highs. We go into a very clean ABC corrective structure, running flat for more downside. And we ride at that level, retesting this trend line of a classical charting point of view of a break of this, maybe head and shoulders, depending how you want to look at it. Looking really clear to me that we want to see copper down from here, which again is part of the dollar bull thesis. And when we zoom out, you know exactly where we're sitting on the higher time frame structure, which indicates to me we're looking for that turn to the downside. And we are starting to see it in something like copper, which would be a good indication that the global economy is starting to see a little bit of broader weakness and leads back to that deflationary dollar strength environment that we're speaking about. Platinum, strong start, but remains in this kind of ascending wedge structure. And as you can see, lots of MACD divergence on the lower time frames on this one, even on the 8-hour, which is a good indication that we are in a kind of transitionary period looking for a turn. So be keeping a close eye on this. The strategy for me longer term is to wait for a break of this and then wait for a little bit of a corrective structure, maybe a flag, trade that to the downside. But for now, just keeping an interesting eye on it and seeing that where we're at on the structure is very much, again, in line with a point where we could see a big turn in the market. Euro New Zealand, patiently waiting for this to give us something corrective. We did see a little bit of a push off the lows, not as impulsive as some of the other ones like this one, which we were liking, but we do have a crossover to the upside. So if we start to see this develop into something more corrective throughout the week, this is going to be a really nice trade in my eyes. I still like this trade to the upside. Long euro versus New Zealand dollar, which again indicative of risk off. So if we start to see this push up, it could be a really, really nice trade. So we're keeping a close eye on this hourly chart to see something corrective for more upside that indicates a long is there for us. Aussie dollar yen, given the price action, I'm going to just remove all of this. And we have to relook at all of this. I thought this was an impulse off the highs, a running flat and downside. We started to get the downside here and then just reversed and went to go break the highs at this region. So how do we look at this? That's a good question. So go time frame by time frame. 8 hour, small crossover, nothing much there. 4 hour, cross down, cross up, cross down, small up, cross down, and then an up turn of trend. So maybe we would have to look at this as a little bit of a triangle or a zigzag of some kind. Just not much clarity as to what we're looking at. Maybe an expanding triangle makes sense. A, B, C, D, E, and now we're seeing upside, which means if this is the structure that is complete, it doesn't really matter what the structure is. If we are going to see sustained upside, we're starting to look at targets of 81 to 82. We're still very much at the highs of the bigger structure. So looking for longs here, very risky in my view. I still think we're close to a level where we're going to see a turn to the downside. So we have to be very cautious of that. When we zoom in, I don't see any decent longs here. So I'm on the sidelines, Aussie dollar yen. Maybe if you were alert and looking for it, this would have been a nice little trade to the upside, as you can see. But nothing in my view that is worth taking given where we're at and my general bearish viewpoint on the market at the moment. So just keeping an eye on Aussie dollar yen for a potential turn into that risk off environment. New Zealand dollar yen, also much cleaner price action. Give us a nice little move down, nice choppy move up, a little bit of a descent or ascending wedge here into the highs of this lower time frame structure. So potentially a little short trade here, a little bit of a risk off short. It looks temporary because this does look like a running flat to me, but as you can see, we're starting to see some price action that indicates we might see a turn to the downside. Don't think this would be enough to be considered a contracting flat, so kind of weighing in. If you look at the pound dollar, we saw very much familiar price action on that rising wedge. So you just have to be patient with it. I don't think it's going to be as complex as the rising wedge of the pound dollar, but there's still viable short trades in here. If you want to really micromanage your trades, trade this little flag to the downside if we break. And as soon as we get down to this little trend line at the lows, you move to break even. Low risk positions just because of the high speculative nature. You may just see this go break or go touch on this trend line, go back up to the high. So you want to take this for break even and then just continue to repeat that process until we eventually break out of it. A more prudent way to trade this is to wait for a break of this trend line wherever it happens, whether it's now or later, and wait for corrective price action following a break of that, and then trade that to the downside. Something along those lines. As you can see, you'll get good risk reward out of it to trade down to the 74.30 region. So if you're more risk diverse, more risk inclined to, more risk averse, then you would want to wait for this price action. Break of the triangle, corrective price action, and a move to the downside. If you want to be riskier, trade this flag, move it to break even earlier on. Just keep it a lower risk position because we don't know how choppy it's going to get within that. S&P just continues to march north, and that's why I think we're going to see a pullback in the New Zealand dollar yen, maybe even the Aussie yen. Will give us more clarity of what we're looking at. because as you can see on the hourly of the S&P, we've pretty much marched north, not even a crossover, tiny little bit of a crossover on the MACD. So strong push up towards 39.10. So I can expect to see a little bit of a corrective price action in there. And maybe at the end of the day, what we're seeing is a bit of an expanding triangle, something like that. A, B, C, D, E, maybe a pullback into this 3,800 region, just a little E wave, which matches the New Zealand dollar yen, and then a little bit more upside following that continuation to the upside. And again, expanding triangles are just a good sign that what we're looking at is something a little bit more of a battle between the bulls and the bears. Lots of uncertainty. When you see a lot of expanding triangles or triangles, you're seeing bulls and bears battling it away, trying to find which direction we are headed moving forward. Dollar ZAR, very choppy corrective price action. Not going to trade any of this. It's very confusing as to what we're seeing. Potentially what we see is a push off the lows, which matches that little bit of a risk off scenario we're looking at heading into the week, and then a move down, and all of this is correction. But when we zoom out, we can see that what we're seeing here is potentially just a bottoming pattern familiar to us from previous eras of the dollar ZAR major bottoming section, because this is what the last majors looked like. So we're keeping a close eye on that to develop into a bottoming pattern rather than a correction for more downside. Singapore dollar, very messy structure, impulse up A, B, C, D, E, and we're at the minimums of that structure. So we have to wait and see how the Singapore dollar plays out. Mexican broke out of a descending wedge, went into a little bit of an A, B, C, D, E expanding triangle. We'll have to wait and see. We took a small little flag here, which you should have got break even on. Good example of the kind of flags we're looking to take in some of the pairs. So you take the flag, it breaks higher, you move it to break even not long after that, and then you either take break even or you see it run. This could potentially be developing into just a little bit more of a complex expanding triangle, and we may still break higher. This is potentially a tiny little flag at the low, so you could take this trade right now if you feel confident. It's quite a strong break to the upside, and we'll have to wait and see if this break to the upside is going to persist. But that's not a bad looking trade in my view. It's worth keeping an eye on, maybe a lower risk position. Because as you can see, if the structure plays out, what you're going to see is a push, A, B, C, D, E, and then a nice push up to at least 20.8, 21, which is a really nice lower degree of time frame trade in terms of the structure. So definitely worth taking in my view. Wait for the close of this bar and then look to put an entry order above those highs to see if it takes off for you. Bitcoin, very, very tricky price action. What are we seeing here? I don't know. If you go to the 8 hour, you can see what we have is a crossover to the downside, potentially still keeping a potential eye on this as an ABCDE. It's very, as an ABC for a move to the downside, basically a triple top, if you want to look at it like that. And if we start to see sustained downside, that would mean that definitely started to see that bull market. The problem with this trade is that there's very good argument that what we're seeing is a triangle and a break of that triangle, A, B, C, D, E, break, retest, and then off to the upside. So it's very, very tricky. If that is the case, we're looking at a $50,000 upside target of this move, given the structures we're looking at. And all we have really here is one big cross to the downside. So it's a bit tricky, no real understanding. This could all be a cross to the downside that continues to the downside, or could be part of a correction that moves to the upside, or it could just be Bitcoin doing what it does, where it looks like it's forming a decent corrective structure. It's more of a zigzag, and then it takes off again. The zigzag takes off again, so very tricky. But obviously the Bitcoin bull market seems to be sustaining. We still haven't broken those old highs though. So we're at a very important level here. We have to see a break to either side. If you really want to trade this, I would put an entry order for a long above these highs. And if it does break, you should get 50,000, which is a pretty good upside target, given that's a good 22% from a break of the highs. So that to me is the best way to trade that. Alternatively, you could do a long order above the highs and a short order below these lows. So a little bit of what you would call a straddle position in options market, where if it breaks higher, you take the benefit of the upside, and if it breaks lower, you take the benefit of the downside. But anything happening in here, we just wait and see. Ethereum, another one that's kind of wary. We have this little bit of a ascending type pattern. This might be developing into a decent running flat. So we have a crossover to the downside. It's going to go to the 4-hour. Pretty good crossover, impulse up, A, B, C, D, E, impulse up, move back down towards 1300, and then break higher. That's a decent running flat, good corrective structure, and a good indication of upside potential, where you would see an upside target of around about that 2000 level. That's obviously going to be a big round number. So a move down to like 1350 on Ethereum could be a potential buy if you see a turn to the upside. So from 1350, maybe you get in at 1450, you can see a good 30% to the upside. The problem with this is it still has a little bit of a potential rising wedge formation, especially when you look at the weekly. You're oversold on the weekly RSI. You're breaking down in terms of the MACD divergence, and you could, like we said with Bitcoin, you could still just be breaking to the downside from here. So just be cautious of that, especially when we look at the higher degree timeframes. We're sitting right at those old highs and the potential to be breaking back down towards the this level here. So potentially still some big moves to the downside to come when we look at the bigger time frame structures. So just be cautious of what we're looking at here. Could still see 300 on this chart. Euro CAD, still potential to this to break to the upside in the weeklies, and we still want to see a little bit of a move to the upside that indicates a potential flag trade, which we may be getting here. So this is another flag that could be worth taking. If you zoom out, you can see how we've got nice MACD divergence. A little bit of dying out of momentum. The structure looks pretty good. We've been in this long drawn closed range for a while now. And again, we may be going into that risk off scenario where the euro rallies against these other currencies that would be affected by dollar strength. So this could look like a decent trade to the upside, decent flag worth taking. Euro Swiss, we were waiting for some corrective price action, waiting for this to develop. This is another one that could play out really nicely. If we see this push down towards 108, that's definitely a flag we want to take, or a trade we want to take to the upside. Zoomed out, you can see very similar scenario where you have a big impulse off the lows. You go into this kind of triangle shape that's just forming a spring to break one way or another, and more than likely we're going to break to the upside from here, or have already started to break to the upside. So again, that's another long euro trade we're looking for against these other lower risk forex pairs. US dollar Swiss, another one that we just have to wait and see. We've broken up, went into correction, broke up. So the structure is complete, and now we just wait and see where to from here. Are we going to correct for more upside or start to impulse to the downside? No trades here for me, just waiting to see how it plays out. Same with US dollar yen. As you can see, the US dollar yen had a very, very strong rally off these lows since the beginning of the year, and it looks like it wants to continue. But we're just sitting at the end of a corrective structure on the lower time frames, or of a structure, a price structure. Whether this is a price structure that starts the move to the upside, or a corrective price action structure that's going to lead to more downside, is yet to be determined. We just have to wait and see how things develop in here over the week. So cool, guys, that's what I got on my radar for now. A couple of flags worth trading today or tomorrow. but we'll play it out the rest of the week, seeing how this new format plays out, where we have daily breakdowns of what to expect in the market and what trades to take. But yeah, hope you enjoyed this Monday game plan. And if you're a member, we will see you in the trading room. Otherwise, chat to you next week.